European leaders remain at odds over measures to tackle the crisis, though there is a broad agreement on creating a banking, fiscal and political union. The steps needed to be taken to move in that direction seems to be creating tension between big economies like Germany, France and Italy. Despite fading expectations from the summit, the markets are marking small gains. What you are seeing on your screen is the Dow Jones Industrial Average in the US, which is up about 0.3%. But we should pull up Europe as well at the current juncture and see how Europe is trading ahead of the EU summit. That's Paris for you, up 0.8%. The FTSE in London is up 0.85%. In Frankfurt, the DAX is up about 0.55%. And in Greece, the Athens General Index up about 0.9%. In Portugal and Spain, the index over there are up about 0.9 and 0.6%. each. Kimberly Lim and Kathy Yang joining us. Kimberly comes in from London, Kathy from Hong Kong. Kim, I'm going to start with you. The market's looking up today. Tell us how trades are shaping up and also how the euro is doing.
Well, every day feels like Groundhog Day this week. Ultimately, investors are still feeling cautious ahead of the EU summit this week. There's not a whole lot of positive news to encourage investors that a united front and bold steps will be taken at this week's meet. Germany's Chancellor is still standing steadfast against the idea of a common Eurozone bond with fighting words, as the European Council President releases a report envisaging some sort of common Eurozone debt in the medium term. So the uncertainty is keeping the market very much on its toes. If we take a look around at the numbers, low volumes, but broadly a higher picture with defensives like utilities supporting the market. Cyclicals are under pressure with miners and chemicals leading the fallers there. If we look at the single currency, it's holding pretty steady against the dollar this session, but again, gains are likely going to be capped given the lack of optimism right now, for the most part, surrounding this week's summit.
Also, Kim, Italian bond yields continue to rise. What's happening over there in the bond markets?
Well, that's quite right. Now, the country's 6-month borrowing costs have neared that 3% mark at auction earlier, their highest since December, and up from 2.10% a month ago. Now, in terms of the volume, the numbers look pretty good, strong demand, but the worry for the market are those yield levels, which analysts say are just too high. Now, there's a lot of concern really growing about Italy's ability to keep funding its debt pile, with the benchmark 10-year yield over 6%. Italy is calling for the bloc's rescue funds to be used to ease pressure on its bonds. Now, tomorrow will be the bigger market test when the country offers up 5- and 10-year debt.
Now, Kathy, in Asia, it looks like investors are choosing to stay on the sidelines ahead of the EU summit, but aren't we seeing some pockets of bargain hunting now after consecutive days of declines?
We did see pockets of bargain hunting, only because some of the investors in the region said they'd fallen too far too fast over the past couple of days. But the overriding theme, the worry over the lack of any significant breakthroughs in the upcoming EU summit, is keeping big bets at bay. In Seoul, for instance, we've seen Samsung Electronics shares reversing declines, value seekers locking in bargains after the share's hefty fall in recent sessions. Here in Hong Kong, the investors went for jewelry retailer Chow Tai Fook, only because it reported stellar earnings. But even that single positive news helped lift all other luxury stocks and other Chinese retailers here, and helped Hong Kong shares outperform most Asian indexes.
Now, Kathy, the selling we've seen across all asset classes has included gold as well, but what are the prospects now of gold becoming a haven amid the ongoing crisis in Europe and also the whole global slowdown that we see?
Gold will always be gold, and a haven at that, because despite the selling that's gone on in gold, and in a large part because investors used the money they got to cover losses in other asset classes such as stocks, gold is still up on the year. And for the World Gold Council, the managing director Marcus Grubb told us he's still convinced gold is, in his words, in its 12th year of a bull market. So overall, he's seeing the lending and selling in gold, which really has had an impact in the market. He thinks it's probably reached its peak and that those price pressures are going to abate in the second half of the year. Grubb also told us that the gold market is going to be a lot stronger.